Dan, let's begin with you. What's really driving the action?
Well, I think that in the last week you had two headwinds to basically economic growth and also headwinds to kind of people feeling good about the markets, kind of just being turned away for at least a few months or so. That was obviously trade and it was Brexit. And now we're at this point of the year where we're up 27.5%, 28% in the S&P 500. And there's really not too many reasons to sell stocks between now and year end. So I suspect you close plus or minus a couple percent from here at December 31st.
It was a very strong day for European stocks today, which might have helped, at least at the open here in the US. Samantha, do you think that improving global outlook is playing a part here in these record highs?
I definitely think it's part of it, right? We think the manufacturing data globally, which has been in contraction for the last year and a half, is bottoming. I do think, though, it's priced in, right? The S&P 500 is up about 8% over the last 2 months, and that's not on earnings growth or earnings revisions going higher. This is really just on sentiment and investors feeling better.
Paul, is that investor optimism well-deserved? Or these big issues that have now, they seem resolved, but is there a possibility that we see a re-eruption of trade tensions and Brexit, though it looks like it's going to happen, it's something that's going to rear its ugly head before it's a done deal?
Yeah, I mean, there's always a possibility of that. But I think what we also need to mention is that what's the key trade of the last 2 months is the Fed basically saying we're not hiking rates. And they reiterated it last week. We're serious. We're not hiking rates anytime soon until inflation shows signs of overheating. And right now, the indicators aren't showing that. So when you lift the uncertainty, you have an economy that's stable, a global economy that's stabilizing, a U.S. economy that's actually showing modest growth, and a Fed on the sidelines. It's a good recipe for stocks.
Samantha, is there going to be an increasing focus next year, therefore, on earnings? And were you suggesting just then you're not that constructive on the earnings outlook for next year?
We're not as constructive on earnings, I think, as the street is. I think if you look at the fact that the U.S. economy is going to be growing at 2%, we can basically back out what revenue growth for U.S. companies is going to be, and let's say steady but slow global growth. I think buybacks are also coming down. We know that. But I think margins are kind of the big thing that are still up in play. We really don't know from here if margins are going to deteriorate more or they're going to stabilize. And I think that's the key question for U.S. stocks next year.